in today's video, I want to talk to you about the 8 wealth killers that you should avoid in order to make sure you really grow and maximize your money. The first one is not being invested. And that's actually one of the biggest mistakes I see a lot of people doing. Because what happens, they follow the news, they read that we had an all-time high. For example, here we see the S&P 500. And yes, all the time you look at it, it goes up, and say, well, I better wait until it drops and then I do my buy-in. And yes, of course, along the way, there are little price resets over here. It drops a little bit and then it goes back up. So the fear that people have is that they pay too much and then it will go down afterwards. But that's exactly the problem, because here you're trying to time the market rather than spending time in the market. You're trying to outsmart it. And nobody knows the future, right? Nobody could have seen coming what happened here back in 2020 or back in 2008 when we had the financial crisis. So many things that are uncertain. So why would you try to perfectly time it? In fact, if you would have missed the best 10 days in the S&P 500 over the last 20 years, from 2004 to 2024, where the normal returns would have been anywhere from 9 to 10%, your return by missing those 10 best days, trading days, where you would have seen the biggest growth and increase, your returns would have only been 5 to 6%. That's a major change. If you had an initial investment of $10,000, instead of being worth $65,000, if you left it in there all that time, it would have only returned less than half of that, of around $30,000. So it just shows you being invested is so much better than trying to time the market, and many times not being in the market because you think it's too expensive. The next point has to do with living beyond your means. Now, don't get me wrong. We all work very hard to enjoy nicer things in life, right? And I know for a lot of guys watching, this is really a status symbol to have a fancy watch or travel business or first class, right? I mean, it's nice, and don't get me wrong. I mean, it's important to treat yourself as well, right? But the problem is if people spend too much of their money that they don't actually have to impress other people, that way you have less money to invest to grow your net worth and wealth over time, rather than investing into short-term prestige and status, which might give you a little bit of ego boost or some great social media stories, but long-term, you're really doing yourself a disservice. Really only try to increase your living standards in proportion to the increase of your income, right? And ideally even slightly lower, so that your income continues to grow faster than your spending habits, because otherwise you just won't be in a position to deploy more of your capital and your income towards growing your wealth. Another very important point that I see a lot of young people doing, and that has to do with ignoring high interest debt. Because it's so easy these days to buy something now and pay later, right? Every website you go to and you buy something, they all advertise, buy now, pay later. That's really cool. And it's nice sometimes. And I get it. It's very convenient, right? But the problem is if you keep on doing this, your debt will accumulate and you will have very, very high interest payment on those. Usually those personal loans, they are very, very expensive. I'm talking about 15, 20, 25%, if not more, in interest payments. So a lot of people, they don't even pay back the debt, they only service the interest. And that's a rat race you won't really get out of. And instead of using that money to grow your own wealth, you're basically making those banks or lenders even more rich, because they're actually benefiting off you. And while I'm always recommending to keep your cash in a high interest savings account to benefit from high interest, here it's the exact opposite, and you're actually paying people for borrowing the money. And that goes back to the previous point. If you can't afford it, just don't buy it, to really avoid racking up those debts, because honestly, that can be so painful and really hold you back. So if you do have a big personal debt outstanding, honestly, I recommend you first paying that off rather than investing. Because on the one hand side, you're paying potentially 15 or 20% in interest versus 8%, 9%, 10% returns in the stock market, right? So actually your return on your money is better off by paying down the debt, and only afterwards, once you're debt-free, investing into the stock market. So really make sure you avoid it in the first place. Only pay for things that you actually have the money for. Don't try to impress other people. Make sure you invest in yourself to grow your wealth. And many years from now, you will be in a very strong and good position to look after your family, treat yourself, and enjoy the finer things in life. Another big killer of wealth is poor health management. Some people spend the first half of their life to gain the wealth, only to end up in the second part of their life to spend all that wealth to regain some of their health. Because so many people, they build successful businesses, and it's really something I look up to, but they do it in a wrong way because they completely neglect their life, right? Either they start drinking, or they smoke all the time, or they don't exercise at all, eat junk food, and that really takes a toll on your body. And ultimately, your body is your greatest asset, right? I mean, all the money in the world means nothing if you have a terminal disease, you have bad health, you can't move around, you can't enjoy your wealth. And I think it's really not worth it. And most rich people, when they get towards the end of their life, they always say, if I could use all the money that I have right now just to regain some youth or health or energy, I would definitely do that. I would give away all my money. So be smart about that and start early on. Now myself, I started preparing for my first marathon in Dubai early next year. So I'm really getting into it. Now I'm running every weekend 30 kilometers. And honestly, it's not easy. It's painful. It sometimes really sucks, but I know I'm doing something for myself. Yes, it's going to be great to be running the marathon and so forth. But first and foremost, I really see this as a daily health investment into myself, because I know every time I move my body, I exercise, I go to the gym, I go for a run, I'm doing something to get more energy, to be stronger, to have mental clarity. And that is so important, more important than any wealth in the world. Trust me, ask any sick rich man, they will tell you exactly the same. The next point has to do with the lack of financial education. Now, even if you do have a great understanding of finance from a couple of years ago, we are now in such dynamic world that a lot of things are changing. Now, there are always going to be some timeless fundamental truth. Obviously, we can agree on that. But at the same time, a lot of the investment vehicles and the way how to get the most out of your money, these things are constantly changing and evolving, right? I mean, a couple of years ago, we didn't have any cryptocurrencies. A couple of years ago, you couldn't just open a broker on your app and buy an ETF without any fees anywhere in the world. I'll keep your cash in some of the brokers, like I use myself, for example, Trading 212, where I get 4.2% on my interest just by parking it over there. That's amazing, right? And if we don't continue to educate ourselves, we are going to be falling behind and once again not really maximizing our money. So what worked in the past is great, but the future might be very much different, right? And if you're not keeping up with the times, you might have missed out on a lot of AI gains, right? Or benefited from those companies investing into AI. So you want to be on top of the things, what are happening in the market, and keep on educating yourself. Now, obviously, that's part of why I'm doing those videos, to give that free education to all of you and hopefully do my part of elevating and simplifying the understanding of personal finance and investing. But I'm also a big fan of books, and under this video, you find the description to a link where you can download my favorite books that really help me to get a better understanding of finance, investing, and all things money. Another big mistake that's holding back a lot of people is that they're actually starting way too late. They're way too long. They don't, once again, have the understanding of the importance of investing, and they just wait for one eventual day in the future. But that's exactly the problem, because time can be your best friend or your worst enemy. This is one of my greatest investors that I look up to, Mr. Warren Buffett, one of the most wealthy men in the world. And look at his net worth, how it developed over time. When he was 14 years old, he had already 5K to his name. That's probably more than I had at the time, but honestly, still quite relatable, right? At 30, 1 million, which again, seems kind of relatable, especially these days. Of course, that was many years ago, so 1 million back then was worth even more, but still sort of relatable. And then you see over time, it grew a little bit, but not something crazy, right? Only after around 55, he hit the 1 billion the first time. And obviously from there, it just exponentially grew. And it only took another 40 years to reach over 100 billion in net worth. I mean, it's absolutely unbelievable, but it just shows you the power of compounding growth over time. If he only would have started investing when he was 50, you can imagine that graph would have looked completely different. He would still be wealthy by all means, right? But certainly far less than he managed to achieve by starting early. The next big killer that I see a lot of people doing that keeps them from growing their wealth over time is paying yourself last. They pay everything first, right? All their bills, expenses, rent, whatever they have to. And I understand these are important things, right? We all have them, right? I would love to avoid paying my rent or health insurance, but we have to pay those expenses. I get it, right? We can minimize them, but there's always going to be certain expenses. But ultimately, if you prioritize all of these things first, then what you will not prioritize is investing. That means only at the end of the month, you will see how much you managed to still save after spending all these other things, plus treating yourselves and having a night out and what have you. And then it might be very little, less than you planned for the month. And you say to yourself, well, I'll try again next month and maybe then I can invest a little bit more. But that's exactly the problem. Versus if you would have invested first the amount that you set out to invest every month, and hopefully that number grows over time as your income grows, you get promotion in your job, salary increases, right? So that number should be growing over time. But the principle of investing the money as soon as you earn it, either from your company, from your employer, it doesn't matter from where the income comes, make sure either you automate the process of sending some part of it into your broker or any choice of investment vehicle, but to put it to work to start growing for you. So you make sure you stick to your goals of investing a specific amount every single month, rather than spending everything and then at the end of the month, well, maybe I invest something, maybe not, because doing that, you will never be in such a position. So make sure you prioritize investing first, have the money grow for you in your favor to benefit from compounding over time and not the other way around. And the last one might surprise some of you, but that might potentially be the worst out of all of the previous mistakes. Now I understand not all of you might be married or are even planning to get married one day, but statistically, depending where you live in the world, but there's a higher chance that you're gonna be divorced than not. These are just the statistics. I mean, divorces are on the rise globally. I mean, that's a fact, right? But these can get extremely expensive, especially when people don't have a prenup, where you basically previously, before the marriage, agree on how assets are being split. Now, that makes sense if you come into a relationship with completely different levels, right? But a lot of people, they might meet each other when they're both young and grow their successes together, which is great, right? And then it really doesn't make sense to have a prenup because you're building everything up together. So when you then divorce, naturally, in many cases, you might end up splitting everything 50-50. And that can be extremely painful, right? Of course, on the one hand side, you also build it up 50-50, so I get it. There should be a fair share. But at the same time, for example, if you had one house that you both invested in, and then obviously it had to be split, then for example, either one person keeps on living there and the other person moves out, but then the person living there may have to pay half the house value to that person. Or let's say both of the people agree to move out and the house is being sold and then the proceeds are being split 50-50. But that's exactly the problem, because many times you might be forced to sell that house when the markets are down, right? So like any markets are fluctuating, right? And maybe in that particular situation, the housing market is down, you're forced to sell it, you're going to have all the various costs, the legal costs, the selling costs, all these things. So in many ways, you're actually going to be losing out a lot of money. And of course, I'm not saying you should be staying in a relationship just to avoid the divorce settlements and so forth, right? I mean, if you want to divorce someone, there hopefully must be valid reasons, but I just want to also re-emphasize the point, the person that you marry, that might potentially be one of the most important decisions, not just for your own life and enjoyment, but also financially that you can make, because that can really have a huge impact, especially the longer you've been together, the older you get, your net worth starts growing, and if you have to split that 50-50, if not more in some cases, you're really going to be losing out. So I think you really want to think long and hard about it. I think marriage is a beautiful thing. If you really share the life with your partner and raise a family, I think it's amazing. Just be very mindful that this can definitely have a huge impact on your finances. And lastly, a little bonus, because I don't really think it's a wealth killer, but I would still put it here. And that goes back to one of the previous points of living beyond your means, because a car is really not an investment. Some people say I'm investing into a new car. It really isn't. Now, granted, look at this car. I mean, I absolutely love it. I would love to drive it one day, and hopefully I will. But if you buy a brand new Porsche, for example, or any other nice luxury car, as soon as you drive out of the showroom, I mean, that car is going to be losing 30-40% in value. Literally, the value drops right away. So it's so funny when people try to time the markets, but they buy a car knowing that the value will drop no matter what, and it will never increase to what you actually bought it for. So on the contrary, on top of it, you're going to be having a lot of expenses, right? The maintenance cost, insurance cost, fuel, all these things, you're going to be plowing into that every single year, every single month, all the while the value of the car is actually dropping. So it really is not a smart investment. But at the same time, of course, it's hard to live a life these days without having a car. For me, a car means freedom. I always enjoy having a car, but would I buy a brand new car? Maybe one day, if money is really not something to think about anymore. Of course, it's nice to have a brand new car, but right now I would probably go for a 2, 3, 4-year-old car that's still in a great condition, but already the biggest depreciation already happened, meaning when I buy it, the further value drop won't be that big anymore, so that when I sell it eventually, I have very little value lost, rather than if I would have bought a new car. And in some cases, if for example you run your own business, leasing a car might actually be a better option, where you then can write it off as an expense against your tax bill. That might actually make more sense if that applies to you. Well, there you have it. I hope those points were insightful for you, and I would really urge you to really embrace those points and avoid them to make sure you really maximize your money and grow your net worth over time. Next up, check out this video over here. Thanks a lot for watching. Really means the world to me. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.